Good day, everyone. I am Bernadette M. Magaling, and at this point, we will analyze the financial reports of the Cebu Air Incorporated and its subsidiaries. Along with the rest of the aviation industry, Cebu Air faced the challenge of the pandemic, which according to them is one of the greatest challenges that they faced yet. As we all know, travel has been restricted ever since 2019, and in 2020, the COVID-19 pandemic struck the world by surprise, hitting the travel and tourism industry hard. So here we will see how the company is doing financially, and by means of analyzing the financial aspects of the corporation, we will be able to see the extent of the impact of the pandemic has brought to the company. So here is the consolidated financial statements of Cebu Air Statement of Financial Position for the years 2021 and 2020 and 2019, and the consolidated statements of comprehensive income for the years 2020, 2021, 2020, 2019, which was audited by the SGB with an unqualified opinion.
So, in this analysis nga ni tatlong years, so I will be using the ratio analysis that will provide a summarized and concise study of relationship among various financial ratios shown in the series of statements. So, nandito sa screen is the financial ratios that I computed that highlights the liquidity ratios, the financial leverage or debt ratios, the activity ratios, the profitability ratios, and the growth ratios. Next slide po. First is the liquidity ratios. Under the liquidity ratios, first is the current ratio computed. Next slide, Miss Press. So in the liquidity ratios is the current ratio computed as current asset divided by current liability. So here we can assess whether they are handling their short-term obligations well. From 0.61 of 2019, it goes down to 0.36 in 2020, and subsequently increase in 0.7 to 0.74 in 2021. So this means that they have this means that they have 0.61 for 2019, 0.36 for 2020, and 0.74 for 2021 peso of current assets for every 1 peso of current liabilities. So we want a current ratio of between 1 and 2. So ang preferred natin is 1 and 2, and as you can see, ever since 2019, before the pandemic, only 0.61 yung kanilang which is below yung preferred current ratio natin. Tapos nung nagkaroon ng pandemic, bumaba siya to 0.36, which becomes more di ka nais dahil bumaba siya lalo. Dahil hindi din naman natin masisisi dahil lahat naman ng industry, specifically the travel, kung saan naapektuhan yung mga restrictions, ay naapektuhan talaga dahil wala silang kita. Even before, hindi na talaga siya desirable, pero we must look it more broad, wherein low current ratio may mean that they are really putting or using the current asset to grow further to the to grow further the company, at which I can say naman na sa previous years nila, yung before 2019, kahit mababa yung current ratio nila, ay may growth pa rin na matatawag kasi maganda talaga yung balance sheet nila, unlike dun sa competitor niya Napal. They are really doing good compared to its competitors. So even if their current ratio is low, it is reflective on their growth. Next slide po. So the liquidity of the company for 2020 can also be analyzed using the acid test or quick ratio, similar with Miss Press. So similar with the current ratio from the 0.49 of 2019, it goes down to 0.23 in 2020 and subsequently increased to 0.66 in 2021, which indicates na their ability to cover short-term debt obligations with current assets is recovering from its downfall in 2020 2020 because of the pandemic. So unti-unti nang bumabawi sila sa acid test kagaya din nung ano. Ito naman ay kagaya din nung kagaya din nung nauna, which is the current ratio, unlike na um magkaiba lang sila in the ano na niles natin yung inventory natin dito. Next, moving forward, we will now go to the financial leverage or debt ratios. Next slide, which under first first is the debt to total assets ratio, wherein as you can see, the debt to total assets ratio increases from 2019 to 2020, which indicates that the number of debt for every assets has increased. So, ang gusto natin dito sa debt to total assets ratio or the preferred debt to total assets ratio of the industry is 0.3 to 0.6, and yun ay naga-denote that the lower the debt to asset ratio, the better. So, kung mas mababa, mas maganda kasi hindi natin di gusto ng investor na yung debt ay mas marami sa total assets. And as you can see, from 2019 tumaas siya, wherein nagmimin lang siya na nagadepend yung company sa utang. And from the computed numbers, even in 2019, it does not pass the desired ratio. So mas mataas siya sa 0.6 na preferred natin, and worrisome na nagataas siya per year, and nagataas siya per year kasi nga nagadepend yung company sa u- sa sa pag-uutang sa ibang sa pag-uutang sa creditors to survive and further grow. This means na the percentage of the total funds that are provided by the creditors are rising, which could impliedly mean that the company is not safe or with high financial risk. Next is the debt to equity ratio. Next slide po. Wherein it also increases from 2019 to 2021, which is also not good because quite same with the debt to total assets, we want a ratio. So ang gusto natin na ratio ng debt to equity ratio is between 0.5 and 1.5. And as you can see, kahit nung 2019 until 2020, there is greater significant amount of equity finance with debt per year. The numbers are too unfavorable for us because the company has too much debt which is risky. However, kung titingnan ito ng ibang investor, looking at the bright side, we can't conclude that because they have high leverage ratio, they are struggling. So, even mataas yung kanilang debt to equity and mataas yung leverage nila, hindi natin ma-assume na nag-struggle sila kasi may ibang investor na nag-think na ito ay paraan ng company para to further stimulate growth. Kasi especially ngayong trying times nga na mention ko na kanina na sila ay nag-recover pa lang from the effect of the pandemic. On the point of view ng mga some investors, if they grab this chance kung saan nataas yung leverage, they will reap high return if the growth plan is successful. So as we know, with high risk comes greater returns. So some investors will like this, but some will not. It depends really. So next is the long-term debt to capitalization ratio, which next slide, which also increases, which implies that the company's long-term debt is increasingly accounted for the company's total capitalization. So, yung as can be observed do sa kanilang financial statement, statement of financial position nila, ang pinakamalaking amount sa balance sheet ay property and equipment with almost half of the other assets. As ito din ay na-mention na kanina ni Mayflower, kung saan sinabi niya na yung weakness ng Cebu Air nga ay yung sobrang laking fund sa property and equipment, which hindi naman natin masisisi dahil they will basically invest in planes that are in trend and will suffice the want of the customers for efficiency and effectiveness also of their operations. So next is the interest earned ratio. Next slide. Which this is also called the interest coverage ratio, wherein it can be observed that in 2019 the ratio is desirable with 4.12. So sa 2019 medyo maganda pa kasi positive siya, and pagpasok nung 2020 yung nag-boom, nag-negative siya with 9.43 in 2020 and 9.22 in 2021. So here, the higher the ratio, the better, because this means that the company presents less of a risk to investors and creditors in terms of solvency. So mas mataas, mas maganda. So in this case, bumaba siya from positive to negative. This is not the case for the company because nga bumaba siya, and mean lang nito na ang company ay having hard time and decrease its ability to easily pay interest on its outstanding debt. Moving forward, we will now go to the activity ratios, and first is the inventory turnover ratio, wherein this has decreased from 2019 to 2021 also, because as can be seen, sales decreased big time from 84 billion. Yung 84 billion na sales na nung 2019, bumaba siya sa 22 billion nung 2020, and at bumaba pa siya ng 15 billion in 2021. Samantalang napakaliit na decrease naman sa inventory, which averagely sell off or used after 9 days in 2019 and 31 days in 2020, while 41 days in 2021. So patagal na patagal siya na use yung inventory natin, pero pababa ng pababa ang ating sales. Ito lang, nag-isa ano lang nito na sobrang laki nung expense na ano ng company, samantalang sobrang laki na sobrang baba ng kanilang sales. Next is the receivable turnover ratio, wherein bumaba rin siya from 31 in 2019, tapos 10.13 nung 2021, tama ba yun? And 7.95 in 2021. 2020, tama. Receivable turnover ratio. Kung saan itong pagbaba na ito, inaga-imply na yung effectiveness ng company in collecting accounts receivable from customers has decreased also, which can be clearly seen in the increased average collection period in 2019 with 11 days to 36 days in 2020 and 45 to 46 days in 2021. So next is the fixed asset turnover ratio. Next slide. The fixed asset turnover ratio and computed as sales divided by the fixed asset. Dito makikita natin kung kaano yung kanyang plant, property and equipment, wherein katulad nung sa total assets turnover ratio, next slide, ay tumaas sila parehas, and in this two, we want a higher asset turnover and a higher fixed asset turnover ratio as much as possible, because in the case of Cebu Air, the fixed asset turnover decrease and the total asset turnover decrease, which means na the company wasn't able to efficiently use its asset to generate sales. So when we try to look it holistically, in general, may significant decrease talaga siya sa speed of converting assets into sales. This is evident when we compute for activity ratios na discuss natin kanina, and this is because of the limited operations allowed in the start of second half of 2020. Kasi nga maunti yung mga nagta-travel, bawal bumiyahe, and ang mga tao is conscious na sa health, so they will choose to stay at home rather than to um to go places. This is specifically the restrictions to flights nga, and yung which na nakaka-affect sa income generation ng company. Next ay yung ating profitability ratios, kung saan we will be assessing the corporation's ability to generate earnings relative to various accounts. First, here is the gross profit margin, wherein this largely decreased from a positive 36.55% from 2019 to negative 6.52% of 2020, and to a big decrease in 2021 with negative 0.38 negative 38.96. Next naman natin is the company's profitability without concern for taxes and interest, also called as the operating profit. Next slide, Miss Press. Kung saan nag-decrease din siya from positive 14.88% in 2019 to negative 91.83% in 2020, to a big loss of negative 147.12% in 2021. So kagaya din ng gross profit and the operating profit, the next slide, the net profit margin also decreases from a positive 10.76, next slide, Miss Press, from 10.76% in 2019 to negative 98.31 in 2020 and negative 158.18% in 2021. So dito makikita natin talaga yung sobrang laking epekto ng pandemic o yung restrictions. Di ko ano kung pandemic siya or pero big impact talaga dito is yung pandemic, wherein from positive balance sheet, from positive amounts of 2019, sobrang laking baba papunta sa negative from 2020, wherein tumataas palalo yung loss ngayong 2021. Pero not sure kung this trend is as at its peak, kung saan pababa na siya, unti-unti nang bumabawi ang mga industry. So this is a continuing story po. Though, so there is generally a large decrease in industry because of the low sales caused by the limited operations and more or continued expense of the corporation. So even yung hinto ang operation, syempre may mga expense pa rin na incur, and walang pumapasok pero maraming lumalabas, kaya sobrang laki ng loss na na-generate ng company. Next is the return on asset of the company and the return on equity, which has significantly decreased. Next slide, Miss Press. Which has significantly decreased from positive 5.78% return on asset or the return on investment in 2019 to negative 17.31% sa ROA tayo, Miss Press, in 2020, and 18.01% in 2021. Sa ROE naman, from positive 20.32% in 2019 to negative 98% in 2020 to negative 234.68% in 2021, which means that yung investment ay hindi talaga nag-perform good in 2020 and the company wasn't able to generate high income from equity available to it. So moving forward, the since their net income is negative for 2020 and 2021, next slide, their EPS would also be negative, which as can be seen in note number 29 of the consolidated statement of comprehensive income, um, with negative 37.14 in 2020 and negative 42.13 in 2021. So, dahil negative yung kanilang earnings per share, they will not have a PE ratio, and since they left off 2019 with positive income, we will focus on it with an EPS of 15.22, and if we follow the formula for price earning ratio, the market price divided by the earnings per share, we will come up with a price earning ratio for 2019 of 2.96. If we assess the PE ratio of the company over time, I can say naman na the number is good because even before the pandemic, they maintained the ratio that is preferable by investors. And dito lang talagang 2020 and 2021 dahil negative ang income, there is net loss, there is a negative EPS and will in turn no price earning ratio. So finally, we are down to the growth ratios, which next slide, which we can see the annual growth in sales. First here is the annual growth in sales, the net income and earnings per share. So the same like the previous data, this growth of sales, dito lang natin makikita yung trend kung gaano kalaki yung decrease niya in percentage. From 2019, 14.43%, naging negative siya, may negative decrease siya na 73.33%, tapos nag-decrease ulit siya from 2020 to 2021 na 30.41%. So makikita natin na even naka-recover na sila pero hindi pa rin siya reflective sa kanyang growth rate in sales, pero nababawasan naman yung paglaki niya kasi yung paglaki niya nung 2019 is 73%, tapos yung pagka ng net ang pagkababa niya naman noong 2021 is somehow lower with 13.45, tama ba? 30.41%. So the same goes with the net income, the growth rate in net income. Next slide. Which, as discussed earlier, also decreased from a positive 132.57% from 2018 to 2019 na sobrang bumaba siya with negative 343.74 decrease, and nag-decrease din siya from 2020 to 2021 by 13.44%. So, 13.41 pala. Tama ba? 13.44 pala. So, next, so yung when it comes to the earnings per share, then makikita din natin yung pagbaba niya from 2018, 2019, tapos 2021 from 134 increase in 2019, excuse me, it decreases 144% in 2020 and slight decrease. May nakita pa rin naman tayong light dito kasi yung decrease niya is pababa na, and siguro nga ito na yung time na bumabawi na ang ano, and this 2022 we will see. Next, from the numbers laid down, huge impact to the corporation is evident due to the challenges the country and the world is facing. This is considering the continuous growth of the corporation before 2020. Next slide na, Miss Press, yun na yun. Fortunately, the Philippines' leading carrier, Cebu Air, entered the year with a strong balance sheet. Our financials from 2019. So, yung napansin natin kanina, maganda yung amounts na nag-welcome or nag nag before pandemic with positive increase from 2018. And ang mahalaga naman is the company, how the company maintains resilience and ensuring its ability to fulfill its commitment to provide accessible and affordable air transport services. Next slide po. So, the same goes for us. Even there are hardships in life, eventually by God's time, we will get through this together. So, that's for my part, the financial, analyzing the financial reports of the Cebu Air. And next topic po.